Good morning, everyone. Good morning. Welcome to Trading Syndicate. I'm JJ, and go take a quick look and see what's shaking tonight or this morning, wherever you are. So we have our overnight inventory. My clothes is in the wrong place. Hang on a sec. So yesterday we closed around that 74.82 level. Took all the liquidating inventory from yesterday, gathered it all up, selling it above 75.11 tonight or this morning. Inventory is long. Let's see if we get a correction when London opens. In our morning call, you can see we had single prints going to the downside and we traded through them. I just left that up just to show you that there was supply there. We ate through it pretty quick. We now have 1, 2, 3, 4 sets of single prints. So we have 4 short positions in this Globex or electronic trading, night trading profile. And we are just distributing up here. So I did up balance zones 81 to 88.5, double it to the downside is 66, double it to the upside is 75.03, and then double it again is 75.32. I marked off where we'd have sellers from before, and true to form, those sellers are still there. Really freaks people out when they see that. You know, size sellers will always sell again where they sold before. Hey, Seymour, how's it going? Hey, Raj, Italian trader, Ian, Cisco, Moran, Marcus, and Josh. Welcome, welcome. So a little distribution here. Now it's tough to trade distribution. What if you're looking for a short because inventory is long, so you should be looking short. Say you're building a short position here, right? You can see that there's a distribution here and a distribution here. And every time we dip down, that's where the bids are. Bid up, bid up. You can see that pattern coming. So you know there's a seller at 26, right? This right now is useless to you, right? This just tells you that there's good excess and all those market profile terms, but this doesn't help you trade. If you were short here, your stop would be here if you're a market profile trader. On the 1 minute, you can see that there's a seller at 25. So you're shorting with that seller. If that seller disappears and pulls and goes up, you've lost your backup. Okay. We have a sort of a diverse crowd, Josh. We have some people in the EU, UK. Oh wow. You okay, Seymour? Holy cow. That sounds serious. Well, rest up, man. And we have some West Coasters. We have some people from Hawaii. Seymour, you should be asleep. You just doing this to like pass the time? I get it. I know. They didn't allow me to have a computer when I was in for surgery, so. Oh. Yeah, we have people in Australia, Hawaii, West Coast, UK, Europe. So it's pretty cool. I get to talk to people from all over, which is nice. Okay, so this is kind of slow. Let's see. London's going to open soon. Welcome to the folks who are joining us on YouTube. These distributions are kind of hard to trade. I like to trade from an edge, like when a market does a look below and fail of 75.03, but you can see it's just been, we are in, this is the 4 times profit zone, right? This is where we take the cheap stuff that we bought yesterday at the close and see yesterday's point of controls down here at 84. Then we opened Globex, went down. We got there's a poor low in Globex. So I would love to see if that gets tested in RTH, right? If we get down there, did a look below and fail of yesterday's low. And then it's been just straight up. Like all of a sudden, all the inventory just got absorbed. And now we're in this distribution. These tight distributions are tough to trade because they go sideways, then they dip, and then they pop. So it's very hard to capture this move, right? Because if you go long here, you're going to get stopped out, and it's very hard to know where to get in. You got to be really, really on the ball. And what you'd want to do, for example, if you, and this is not an A+ trade. You draw a line here, you go, okay, that's the top of that distribution. There's the top of that distribution. So when it drops in and pops, that's where you want to be a buyer, right? Same here. There's a top here. Very, very difficult to hit that exactly right. And you've got to be really zoned into the chart, right? It's a tough thing to trade, and it screws a lot of people up. Yeah. The 75, yeah, the look below and fail of 75.11. If you were up at this time, I wasn't. This is what time was it? Oh no, it was up at 6 in the morning. I just missed the trade. I didn't even, I was up late. I woke up late, so I didn't even see that. This right here, don't trade this, right? If you're building a short position, like I wouldn't be building a long position up here. If you're building a short position, let me give you the outs, okay? If you are building a short position, you want to have bids at 22 and 21. Because if it can't get down there, then there's no point being short. Your warning level, I would say here, I'd use 25 as a warning level, and I'd use 26 as an out. So your hard stop would be here, and this is your danger zone, right? If the market starts offering 25, 25 quarter, 26, be careful, okay? Now I'm not talking about A+ setups. I'm talking about when people get into trouble, right? A lot of people talk about the perfect trade and the perfect setup, but unfortunately, we human beings are not perfect, right? Just ask my girlfriend, right? We are not perfect. So we're going to screw up. We're going to get into trouble. Today's lesson, how the hell do you get out of trouble when you get into trouble? Because you guys get into trouble all the time, right? So say you're shorting, right? You watch that offer. Don't worry about the TPO chart. It's useless right now. This is where the money is. The money is in the candles. Because here you can see that there's a seller at 24 and 3/4. And there are sellers here at 26, right? You guys awake? You're with me? This is really important because if you're aware of this stuff, you're going to lose less money. Who here wants to lose less? Right? These are the mechanical things that you need to be aware of. Because if you're not aware of this stuff, you're not really a trader. You're just hoping and wishing and praying. Right? You can see that there are bids down here, and you can see the offer is 24 and 3/4. And right now the market is just kind of going like this. Why is it doing that? Because there are buyers here, there are buyers here, there are buyers here. They're holding the market up. Most probably they're short sellers who are bid to cover. Okay, so if you are short here, and before you ask why are we shorting, because inventory is long, and you see this big candle, and now you see the sellers move down from here to there. And you're waiting because London's going to open in what, a couple of minutes, and you're looking. London usually corrects inventory down. That's why you're looking to short. I'm not short myself, but this is not the greatest short in the world because it's sideways, right? Yeah, we may even get to make some money. It's tough to make money if you're constantly losing money. So I'm trying to show you guys when you get into trouble, when you say you're short at 24, your stop should be 26. If London opens in 2 minutes, and this is where your seller is, if you lose that 26 seller, you don't know where they're going to, they could come in anywhere here, right? So as a trader who, I mean, unless you have a lot of money to add to a trade, I don't want to be 4 points off on a short, right? So if I'm short here, my out is here, where am I going to put my buy orders? Well, you can clearly see that there are buyers here, right? You can see that there are buyers at 22/4. So if you're short 24, put a lookout bid at 22. Because if you can get filled at 22, that means somebody needs to sell under 22 1/4. Huh? Tactical. So you're short 24, right? Your warning level is 25 and your out is 26. You go and you put a buy order at 22. That is what we call a lookout bid. If that bid gets filled at 22, that means there's a good chance that they'll sell at 21 3/4, 21 1/2, 21. Right? The next place you'd be bidding is 19, 19 1/2. Okay, you have to be tactical about this. Otherwise, you're just wasting your time. Okay? You're just wasting your time unless you're going to be tactical because those are where the bids are going to be, right? That's where they were before. So that's where you'd be looking to put your buy orders, maybe a tick above those green lines if you're short, right? If you know there are buyers at 22, see, look how we came down, right? London's opening now, right? Look at London. It could not get down there. See? Look, I just saved you a bunch of money. If you were short 24 and you couldn't get filled at 22, buy it at 22 1/2 and close your trade before you're going to start sucking wind. Look, that seller is gone now. Do you guys understand why I was telling you this before it happened? Does everybody understand the mechanics of how you could have gotten out of this trade? If you were short 24, you should have covered at 22 and a half, 23 before it railed up on you. This is common sense, practical trading. You cannot beat this. You cannot buy any software that's going to tell you this. This comes from watching the chart, paying attention. This is, you have to pay attention to this stuff, right? The TPO chart's wonderful. It tells you where the stops are, it tells you where the position is. But if you want to do business here, you want to go into that neighborhood and do business, that's what you use. You use the 1 minute chart to do business. Right? This gives you a map of the city and the neighborhoods. This gives you what's going on inside that neighborhood. And you better pay attention because we don't have the money to trade the whole city, right? So we got to just go into a neighborhood, make a little bit of scratch, get out. If you can remember these simple things, it will improve your trading because you're not going to get stopped out as much. Right? How do you decide to stay longer or get out of the trade? Well, here's the thing, Grain Monk. If the business reason for your trade goes away, like I was short 24, say I was short 24, which means that they're going to put it on sale. The sale's over, my friend. So there's no business reason to be short, right? The only business reason that exists to short a market is that the wholesalers are putting it on sale. If they start raising price, why would you be short? Not how the bid behaves, the offer. Don't worry about the bid. Worry about this red line. The offer is what sets the price. Now we're looking to see where these bastards sell into this, right? Remember I said if it clears the 26s, where are they going to sell into it, right? That's what you're looking for. Is it here? Is it here? Is it here? You have to you have to spend time looking at this. If you don't, you're going to be stumbling all over the place. First, you need to see it, then you need to practice executing it, right? That's why for newer traders, I believe that you should not trade unless it's from an edge. Right now, there is no edge, right? But I just wanted to go through that scenario with you because I know everyone's short, right? And I knew everybody's shorting, right? Because the market's up 43 points. So people are like, it's got to go lower, right? It doesn't have to go lower as long as there are people who are willing to pay higher prices. And that's the problem. So you look at the offer. Don't worry about the bid. You just mark where the bids are because you know if it comes down here and it doesn't print that, that means they don't have to sell under that and they're going to raise price. And that is exactly what happened. So if you were short 24 and it got down to 22 and you didn't get an execution, you didn't get a fill, okay? Then you know cover that trade, right? Now we know the sellers have moved down to 27 and a half. What's probably going to happen now is the point of control is what? 1,000 contracts? We're going to try and move that up here. And that's what we call distribution, right? So let's see if we can hold the 22s because now you know 22s are bid, right? And we should just bop around back and forth choppy and it'll drive everybody nuts. Sometimes the trading sucks, right? Sometimes you come into trade and there's no trade. A lot of people hate that. They're like, you know what? I got 2 hours to trade. I'm going to trade, right? Otherwise, I'm not going to make any money because I'm only got 2 hours. But if your business setup does not exist in those 2 hours, trading in those 2 hours, if you're just hunting and searching for things, there's probably 100% probability that you're going to lose your money, unfortunately. The best trade here would be a look above and fail of 75.32. Say we went to 75.34.35 and then came back in and we'd short, put our stop here, and then bid the market down, right? But right here, there is no A plus setup. That does not exist. This is a crappy setup right here. And those who are trading this with these small ass candles, the small candles means business is slow. Nobody really wants to buy it. The people who are buying it up here are being forced to buy it because they're short from yesterday. They're short from yesterday. They added to it in the overnight, and now we have 4 short positions underneath us, so they're being forced to buy it up here. There'll be lots of opportunity in this market. All we have to do is be smart enough to wait for it. And that's the hard part, because it's not instinctively easy, right? Most people will try and trade this, but I come in and I look at this and I'm like, oh, inventory's long. The inventory correction here was 2 points. Here it was 2 points. There's no inventory correction. Right here was 4 points down and then pop. So right now, the sellers don't have to lower price. Exactly. Structure is the only reference, and structure, market structure is basically, it's a fancy way of saying these are where the transactions happened. So they were likely to transact again in the same area, right? That's why when you mark off where the sellers are, they'll sell there again even hours later, because if I was making sales at 26 an hour ago and we're back up at 26, I'm going to sell there again. Why? Because I got size. We have 4 sets of singles. It's harder to get this thing down, right? It's like trying to close an overstuffed suitcase, right? So even though it's people, you might think it's too high, even though the structure looks like a giraffe walking backwards up a ladder, right? It's not the best market structure. You now know where the bids are. So you know there's no point just shorting it just to be short, right? There's no reason just to short this just to say you're short. There has to be a valid business reason for your trade. So what does that mean? That means if you're going long, it means that there's no supply and you're going to be a supplier. If you're going short, it means there's too much supply and you're selling with the suppliers. When they stop selling, you need to cover. So say you shorted 26, right? Go put some 24 bids in, right? So I'm trying to tell you guys, so say you were short at 26, right? If you're short at 26, go bid the 24s. Go put it, see the bottom of that candle? Go put a bid there. If that bid does not get hit, take the offer. The POC and VWAP are the 2 main structures shown on the overnight charts. No, John, the POC and VWAP are just 2 places. Like VWAP right now is inconsequential, right? It's 75.01. We're trading 24 points higher, so it doesn't make any difference. We're just distributing over VWAP. The point of control just tells us how good the sales are going. So they just tell us that the position's here. We're going to try and sell it up here for some profit. The structure that you're looking at right now as a trader is here, right? You look at the TPO chart to quickly see, okay, inventory's long, right? Now here you mark off where the sellers are. This is the structure you should be looking at. The 1 minute chart is what you should be trading off of. because the 1 minute chart tells you exactly where the buying is and where the selling is. And if you can make money in between there, great. If it's a tight range, there's nothing for you to do, right? So the point of control, John, is telling you where the inventory is priced. VWAP is telling you that as well. But right now, it's useless to you. So if you're a VWAP trader, it's completely useless. If you're looking at the point of control right now, it's useless, other than you're waiting for it to move up into the 26s, right? But that doesn't help you make any money. It just gives you sort of directional, not directional. It just tells you the environment, right? It tells you we are in distribution, right? Because you buy under VWAP, large wholesalers buy size under VWAP and they sell above it. So we're distributing, right? So the trades here are very, well, they're not A plus trades. If you see tiny candles like this, see this? This means you should not be trading this, right? If you see this kind of action, it's telling you business is slow, right? So say you were short 26 and you had a 24 bid, then you got filled at 24, right? Because it's trading 23 and a quarter. Where's your next bid? You're short maybe 3 contracts at 26. You buy one back at 24, right? Then put a 23 and a quarter bid in and then a 22 and a half because you know that there are buyers here. You need to front run this level. Now, it's not a lot of money. It's not the greatest trade in the world. But if you're short 26, that's the only option you have. There's no reason to go long here because you can see the sellers are moving lower. Does that make sense to you guys? Cool. Right? So you're short 26. Your stop is here at just under 27. There you go. So you're short 26. You cover one at 24. You cover your next contract at 23. There, you should put a bid in at 22 half or 22 quarter. And that will tell you right now, see how it's pausing? See how it's offered there now? We need it to offer underneath 22 quarter. Come on now. Watch the red line. There, it's offered under 22 quarter. Beautiful. So if you have more contracts to cover, go 21 half, 21 quarter, and then your next cover is down at 20, 20 half. Right? So you are shorting the inventory correction. Overnight inventory is long, right? The corresponding move is lower, but you really have to wait and you have to be quick and smart about it. See, we found some bids here at 21. So 26 down to 21, it worked. But it didn't happen easily, right? You use your buy orders when you're short and your stop is here, right? You put your buy orders in. So your buy orders tell you whether the trade's working. So if this buy order gets executed, great. This one, great. This one, great. This one, okay. These two, if these two don't get executed, just go buy it back and cover your trade. Get paid. If you have a larger account, you can wait. But why would you wait? Because look, you came right into the position. Position, distribution, sell it to the suckers, bring it back, no bids here, put it on sale, and you're right back to here, right? This is not apparent to people who are looking at indicators and trend lines and all of that stuff. This is actual business. So a lot of people will go, hey, JJ, your method. It's not my method. I didn't invent this. This is how the business works. And in institutional trading, there's only one way to do business: acquire inventory and distribute it. Institutional traders don't use Fibonacci's, and all that stuff. We buy position under VWAP, we sell it above. If a client tells us to sell stock, we try and get them prices above VWAP. If they tell us to buy stock, we try and get them prices below VWAP. So we get them good prices. They come back to us the next day with another trade, right? They want to do business with us because we get them good deals. Get it? So that's why you need to know where the sellers are because you're a seller yourself. So if I buy 100 contracts at 19 and I know that there's sellers at 24, I'm going to be out of my 100 contracts well before 24 happens. Make sense? So if you think in a simple way, where are they selling? Where do they stop selling? See, now they're going to have to sell it under 21. There's price competition. Do you see where this bid was? Now that's turned into resistance, right? So this now is where the sellers are. See? They were buying there before, now it's flipped because all the people who are long here are trapped and now they're puking it out. So if you're still short, right? Say you're still short, you have a larger account, right? Your next bid's going to be 20. If you can't get a 20 fill, that's going to tell you something, right? Let me see, where's the point of control? Did it move up? Yeah, it moved up. See, good distribution. That's why we're having a little bit of a sale now, right? When you have a good distribution, then you have a sale to bring in more buyers. That's just how business works, right? You ran out of buyers at 26, 25, you put it on sale, right? Yeah, so the point of control did move up. Now we'll probably just chop around in this area here. The overnight market is the best time to learn because it moves slow enough. And also we do these sessions. What you want to do is you want to go and rewind this session and watch where I tell you where stuff happened. That's number one. Number two is you want to use chart replay and go and rewind your charts and replay your charts because that's going to tell you go to replay chart and you can rewind this, speed it up, slow it down, just like watching game film, right? So if I was 75-20 bid, I'm not getting a fill. If I was short and I see it coming back into position, now I did a video yesterday for you guys and I put it in the room. How many watched it? I put a video, an instructional video on how this works yesterday. So this should be nothing new to you guys. Yeah, there you go. Where do I put the videos, Moran? I put them in the ES room and I also put them in the JJ video section. Where is it? Right? So I put it in the right here it is. I know there's a lot of crap in this Discord now. There's a lot of rooms and it's, it's a concept, right? And I put it in the ES room yesterday morning, right? Please take a look at it because it describes exactly what I'm talking about, how to find position, how to find cost basis using a 1-minute candle chart. There's unfortunately, he's got a lot of things in here, right? He's got a lot of rooms and Like every time now there's a new something room. And it's hard. Just ask me, right? Just go to the areas that say JJ Trading Desk, right? And there'll be execution labs, the replay of the live streams, right? Yeah. It'll say specific videos. Yeah. Anywho, alrighty. Any questions? Exactly. It's just we're just kind of going back and forth in this area here. No, not a good long entry at all, Josh. No. Inventory is long and it's correcting lower. So when inventory is long and it's correcting lower, that is not a good long entry. Definitely not a good long entry. This is a go get coffee. The chart's telling you right now, for you, go to sleep. Right? That's just telling you, the business right now is telling you to go to sleep. There's always short covering, Blackhawk. There's short covering right now. People who are short 75.25 are covering here at 20. Right? Longer term traders, depending on what their point of view is, will try and short cover before earnings. Traders who think earnings are going to be horrible will stay short. It all depends on how much money you have, what is your level of certainty. If you ever watch Billions, right? They'll ask Dollar Bill, what is your level of certainty? And Dollar Bill always trades on insider information. So he's like, I am not uncertain, right? I know for sure this company is going to blow earnings because I'm bribing an employee at the company and he's telling me that they're not shipping any product. So I know to short the stock. Get it? But if you don't have that kind of intelligence, it's a little harder, right? You got to go on the chart and all of that stuff, right? I prefer not to trade earnings. I'll let I'll let the people with a lot of money go and play Rock'em Sock'em robots, and then afterwards there'll be some nice trades. You know, the trick to this business is knowing when to do business. They never tell us when. They just trade this indicator, trade that, trade this, but they don't tell us why. In our trading room at tradingsyndicate.org, we're the only trading room that will tell you what the business reason for the trade is. Right? We will tell you why you should take the trade, and where the hell you should get out if it's not working, right? So if you want to learn, and with no BS, no double talk, no jargon, no expensive software, all you need a 1 minute chart, you need the ability to draw a straight line, and you need the ability to pay attention. If you can do those three simple things, I can make you money. Oh, yeah, and you got to listen, right? If you have the ability to listen and follow instruction, that kind of helps, right? If you're stubborn and you don't listen, well, as the guy in Austin Powers says, there's no pleasing you. Okay? And that's it for us this morning. Have a good morning. We're still correcting inventory. I'll be looking for bids at 75.11. Thanks, everyone. Have a good morning. We'll see you in a little bit. We'll see you at 9:15 Eastern Time for our next session. Hey, so we filled one short position. That's not bad. What the heck, eh? Only 3 more to go. Now, because of the nature of this kind of a market, do not be surprised if we take back this entire move. To correct inventory 100%, we got to go tag the close. That could happen. Mahalo, Seymour. Get better, amen. Get some rest, right? Do not be surprised if this whole thing comes apart like a cheap suit, okay? This whole move is taken up by short covering, right? Nobody really wants to buy it up here. They just have to because they shorted it at underneath 7,500. That's all it is. Okay, thanks everyone. Have a great morning. Stay out of trouble, okay? We'll see you in a few hours. Bye for now.